Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are discussing the importance of buying a sound, comprehensive, solid life insurance policy which takes care of the needs of protecting your dependents in the event of your untimely death. So the question is, now we know why we need term insurance. We have an idea of how much term insurance we need. The question is how to get the right policy. And Sarvir, help us out over here. I mean, typically, what is the kind of documentation? And if you're very healthy, great, then it's a green thumbs up all the way. But what if you have some ailments, some pre-existing illnesses? Where might you be rejected by an insurer? And what should you do? What should I do as a prospective policy buyer?
So I think, Surabhi, just like any other insurance policy, it always starts with full disclosure. I think the most important thing that we need to do, especially because we are buying a policy for a point of time when you may not be there, right? That's when the policy would pay off. So you need to ensure that everything that you have disclosed is absolutely correct. And the disclosures are in two broad categories. One is your health. So you need to explain, typically there may be a medical test. So you should explain very clearly if there are any ailments that you have, any medication that you are taking. Sometimes there may be a question around family history. So I think you should answer that truthfully. See, because answering it truthfully doesn't mean that you will get rejected. In fact, then the insurance company will do its work, will do their, tests, and they will work it out. And largely today, insurance companies have different types of options. So even if there is a challenge, they will, find a way to give you a policy. The second thing is that you must disclose what other policies that you have, again, very truthfully. Now, the insurance industry has ways of checking. There is a bureau and they can check from that. But it doesn't hurt to be very, very open and transparent about what policies you have, because again, that helps in calculating your total sum assured that you bought and making it easy for the insurance company to make a decision. Largely, there are just two things. One is your financial profile. Second is your health. And based on this, the insurance company will, obviously, you will get a standard quote and, you will be able to issue the policy. The more cooperative you are, the easier it is to get the policy. And it does take a little bit of time, especially if there's a medical test involved. But I think it's better for the customer to go through that medical test. It also acts as a check. Most of us don't go through regular medical checkups. So I think in that sense also it's helpful. But I think if you do these two things well, then there's absolutely no problem. The process is very smooth.
No, absolutely. It sounds, sounds absolutely logical. It might not be a one-click, buy-at-a-click kind of product. But maybe I'm sure there's a lot of innovation, so maybe that's also there. But just comment on this, sir. In terms of buying a policy, obviously full health disclosure, family medical history. On this financial profile disclosure, does it really matter where I'm working, what I'm doing? I mean, to what extent does that weigh on my prospects of getting a life cover?
Okay. If you notice, term plan is an income replacement plan. As you initially said, it's an expense. The health insurance, similar is term, right? It's not an investment product. It's a risk mitigation product. And it is supposed to take care of replacing your income in your absence, right? Now, from that perspective is where this whole income assessment happens. Okay. Right? So that it's not a money-making tool. It's basically replacing your income. And it's also one of the biggest pieces is income and your education and your work profile. These are also an indicator of longevity.
Under what circumstances can a claim be rejected? And, once again, just to recap, what all can I do to ensure best, highest chances of a claim being honored?
So as Sarvir also said this, right? So the only single reason why a claim can get rejected is non-disclosure. Okay. And again, I would like to kind of put it over here that whatever has been asked for, we are not expecting some to be declared which is not being asked for by the life insurance company, right? So there is an application form that you fill in and the process that you will follow in terms of identification or authenticating yourself, and then also medical terms, right? So the application form in itself takes care of it. So let it be your occupation, let it be your income, let it be your health profile in terms of are you currently suffering or anything kind of any illness in current. So all those things is where you need to be very honest about it.
Sure.
Right? Sure. If this is there is no way a claim can be rejected or repudiated.
Okay.
Right? So the whole piece is the process itself.
Yeah.
If you thoroughly kind of follow the process,
disclose,
and be very honest at that stage, and only those pieces which has been asked for.
Yeah.
There is no need for doing something over and above that.
Yeah.
It's a simple set of questions, and it's simple. It's pretty simple English over there.
Got it.
So,
got it. Okay, Sarabir, coming down to some final thoughts on product innovation, because the industry keeps coming out with, though it's a very plain vanilla product, this term insurance, but now there are a lot of riders as well, right? So what all should someone consider before deciding on a term plan, and what are the additional toppings or riders that you might want to add to your policy?
So I think, Surabhi, the plan, as you said, is a very straightforward, I think, plan which, as we know, pays off demise. The riders that you have available, I think one that Satishwar also spoke about, which I would definitely want to talk about, which is the special exit value, or zero cost as it's popularly called, where you have now almost across plans, you have this feature where you can, at the age of 60, 65, depending on the plan, you have the right to stop paying for the policy and take back the premiums that you have already paid. So this is, I think, a very useful feature, because once your corpus has built up, once you have financial assets and you don't want to continue with the plan, you are able to then get your money back. So effectively, it almost becomes like a free term insurance plan where all the money that you paid, except for the time value of money, is returned to you. So I think that's one feature that customers or consumers should definitely look for. The second, there are features around accidental death benefits. So there's, sometimes you can add a rider which will give you double the payment if something happens to you in an accident. There are plans which have, critical illness plans, which I think is an interesting and important addition that one can consider or should consider. Because when one is critically ill, what happens is that while you will not obviously have a payoff from the term plan, you will have certain expenses. You may not be able to work. You may, need expenses both for your medical treatment as well as, loss of income. So I think critical illness plans make a lot of coverage, makes a lot of sense. I would say that these are the 2 or 3 basic riders that you can add. The other is a form of payment, which is essentially that you can either pay every year for the term of your policy, or you can pay what is called in a limited format. So you can pay over 5 years or 10 years. Now, this could also be something you can consider, because this allows you to pay for term insurance in that limited period, and then ensures that even if, let's say, you don't have a job or there is any kind of income change for you over your lifetime, you don't have to worry about the term insurance premium. So I think I would say, like I said, there are 2 or 3 riders that you should think about, and then there is a form of payment where you could choose to pay in a faster way versus paying over a longer period of time.
And typically, Sarabir, these riders would cost, a fraction of the premium of the policy itself? I mean, some ballpark numbers here?
Yeah, the accidental death benefit riders are relatively inexpensive. The zero cost or special exit value is now built into plans, so actually it doesn't cost anything extra. And the critical illness can cost, that can be 15 to 20% or more depending on the amount that you choose. So that can cost a little bit, but as I said, it's worth it because it covers cost of illness as well as the income that you may lose at that time.
Absolutely. All right. Very, very helpful advice. Thanks to both of you for joining us and helping us give some more clarity when it comes to our life insurance needs, and why term insurance could be, of course, a very, very beneficial product to consider for people across age groups, across sort of life stages as well. Thank you very much, Mr. Satishwar and Surabhi, for joining in. And with that, we're completely out of time on this edition of Let's Talk Money. So it's a wrap from the team that puts this show together. We will see you same time, same place next week.
Let's Talk Money